Good evening or good morning, good whatever time it is you're listening to this. I'm going to be covering February the 21st, 2025, and we're going to be going over the data sets, what's happening with the SPY, and tonight's video is going to be fairly short just because I just got home later and I don't have a lot of time to get everything recorded and everything. So, with that said, let's get straight into the data. So, we have a pretty data-packed day today. So we have a lot of the PMI data happening at 9:45 in the morning, so 15 minutes after open. And then we have a lot of these Michigan inflation uh, data sets and consumer sentiment data sets, which happen at 10, so 30 minutes after open. Um, Other than that, there's really nothing major going on for Friday for data. It is OPEX though, which means that it's it's options expiration. So there's going to be a ton of options expiring, and that means the dealers and market makers are going to focus all their attention to a single strike usually, and usually it's a pretty busy day in terms of price movement. I mean, usually you'll see shaking out on both sides so that uh, the dealers can get those cheaper contracts and close their positions as normal. Just a quick reminder before we get into the technical analysis. If you've been finding value in my insights, consider joining my Patreon. For just $12.99 a month, you'll get access to my trades, courses, and powerful tools to help you grow as a trader. I'd love to have you be a part of our team and community. And it's less than 43 cents a day. So if you'd like to join, click in the link in the description. Thanks. With that said though, let's go ahead and take a look at the daily chart. And as always, we are going to go into the moving averages and the Bollingers. So if you hear me say the MAs, then that is the moving averages. So the 5 MA currently is at 610.85, and since we closed underneath the 5 MA, which technically that's a bearish close, and yes, I know it's red, but that doesn't matter too much to me. More so the level, but we closed underneath the 5 MA, which means that the 5 MA tomorrow morning should open around 610.55, so basically barely above the level we're at right now. Which that means that we can sit there and 5 MA test, which I'll discuss that after I finish going over the rest of the moving averages. Now we have the 10 mil at 607.48. I believe that was focused on and tested today. I'm not entirely positive about that, but that would be the solid 10 MA test. The 10 MA is not really a level I focus on testing though. For me, it's more so a very short term trend indicator. So if the 5 MA is above it, then we're in bullish territory. If 5 MA is below it, then we're starting to enter that bearish territory. We're not below it yet, so that's still good. We had the 20 MA at 605.44. Still about $4, $5 away from where we are right now, but that absolutely can be tested today during this trading session. And then we have the upper Bollinger, which is at 613.95. And again, we're only $3 to $4 away from that. So that's very close to being within test range as well. And just to kind of highlight what I mean by that is, like, if you see the Bollingers here, you see how they contract and expand, or they contract and expand, right? So they expand open, then contract, build up a move, then they expand, contract, then they expand, contract, expand, contract, and now they're getting ready to expand again. We had to, figure out which way that's going, if it's going to break down and form a downtrend and, close this inverse cup, or if it's going to continue heading up for a while. With that said though, let's go ahead and take a look at the 4-hour chart. Actually, I want to talk about the ADL. Even though we had a fairly red day today, the ADL is actually still pushing higher. It's actually still above yesterday's level, surprisingly. So that means that the buying is still stacking up quite a bit. So while we're in this area, we need to be quite cautious because we're very close to starting to break down, but we're also at a point where we can break upward too. So what I mean by that is that we have quite a lot of liquidity here, and that could be a left shoulder for an inverse head and shoulders, right? That could be the head, and then we can form more liquidity right here and form a breakout. So, chop, 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 breakout, right? Um, that's kind of the expectation that I have, and what's supporting this is that if this heads upward, we have a small cup right here. We have a small cup from right there to right there. As you can see, once this cup closes, very likely pull down a handle, and then we would, form the breakout. That can happen in a single session, and with tomorrow being OPEX, that's very, very reasonable. With that said, though, um, getting rid of that inverse head and shoulders, if that doesn't break out, right, we still have this inverse cup right here that can fill out, and then if this fills out, which that's currently at the 599, that's below all of our supports, that would be, I believe the bottom Bollinger, if I'm correct about that. Yeah, that'd be near the bottom Bollinger if we pulled down all the way, just to kind of visualize that. So that is a very large move to head downward, but with us consolidating, it's not the most unreasonable move. And since we are talking about this inverse cup, there is something else I want to discuss, which is max pain, and that's usually something I don't focus on really at all. But with OPEX, I try to focus on that a lot more since the dealers are going to be trying to target a specific strike, whether it's up or down. Um, Currently, a lot of the max pain on, the SPACs, the SPY, QQQ, NVIDIA is all pointing down, and not just down, but like down quite a bit. The SPY max pain is at 601. SPAC's max pain is at 5,950. QQQ max pain's at 525, and then NVIDIA's at 128. So that's a pretty large day. That would assume that we'd be pulling down close to $9 on SPY. So that can happen, but that's not really what I'm anticipating. I'm expecting the gamma, the GEX and DEX to suggest it earlier in the morning that we're very likely going to start pulling upward. And just taking a quick look on the 30-minute chart, we do have quite a lot of liquidity that can be taken downward. We have the 605 area, we have, the 602, 601, so there are quite a bit of gaps downward. We did close this gap at the 607 with that candle today, or with those candles, selling candles downward. Actually closed it down to the penny just about. So if that holds, then potentially that can also be an inverse cup from right there, then form the handle, pull downward. Now, if we're going to see that happen, we're very likely going to see a head and shoulders form right here, or some sort of, inverse cup pulling downward, and then forming additional liquidity with the handle to head down. Uh, with that said, though, I don't want to make tonight's video too long, so I'll go ahead and end it here. But just basically, OPEX is really difficult. It's a trading day I don't enjoy doing very often. We have room up to the 611, and we have room, all the way down to the, 605 or below. Start looking for what structure is forming here. We can have a miniature inverse head and shoulders form right here just perfectly fine, and form a breakout too. So just be on the look for the microstructures. It's going to tell you a lot about the day tomorrow. Make sure you look at the gamma levels because that's, again, going to tell you where the dealers are very likely going to drive the price. And the max pain is very likely going to change on the day tomorrow when we actually do pull the data. So if I do notice anything, I'll be posting it in Webull. Other than that, I hope everyone has a great day or a great night, and I will talk to you in the next video.